Hey everybody, and welcome to Breaking Biotech. Glad to be with all you wonderful people again today. It's been about 2 weeks since my last video, and a lot has gone on actually. This week in particular, there seemed to be quite a bit of news. So happy to talk about all of that. Going to talk about a trading idea that I think is worthy. I'm going to probably make a bet, but it's not going to be until later in the year. But that's with Trevena, a company that has a painkiller that was issued a CRL late last year, and they're not looking very good. But there's a small chance that they could get some good news in a small study that would lead to the big increase in their stock price. And other than that, I'm just going to follow up with some of the news of the day. So yeah, glad to be with everybody. A bit of a tumultuous close there at the end today. S&P 500 closed at around 2,800, and the XBI closed just under 88. So it's lost some value from its recent high, but yeah, we'll get into that. So first thing I want to talk about is Trevena. So please check out my previous video on Trevena if you want some details on what's gone on with the company. And for those who don't know, though, a quick background is they have a painkiller, an opioid called olocirudine, that preferentially activates the GPCR pathway of the mu opioid receptor as opposed to the beta arrestin pathway. And they claim in their papers and a lot of their filings that that olociridine's preferential activity for the GPCR changes the side effect profile, so you don't get the respiratory depression and the GI side effects associated with normal opiates like morphine or heroin, for that matter. So olociridine's was marketed as kind of a safer alternative to regular opiates, and also has potentially an improvement in pain-killing activity. So they conducted a number of studies, three phase 3 studies, in which one of those is open label. And I show this graph here as an example of the type of data they presented. So they end up getting a slight increase in the number of responders very early, but long term, that sort of trails off, and morphine catches up and is slightly better, maybe not too much better than the 0.5 milligram dose of olocirudine. So and there are some side effects that are associated with this. One of the things that came up in the filings was they didn't have a ton of data on it, but there's this QT interval problem with some patients that were treated with olocirudine. And so, it was kind of controversial, and I guess you can see here the AdCom failed in late 2018, 8-7, and I didn't really agree with this because it seemed like the treatment was relatively safe and is quite comparable to morphine. So I don't see why this thing couldn't be on the market and could provide a good competitor to morphine. And you can argue, how tough it would be to have them battle against morphine, since morphine is pretty ubiquitous now, but I don't see why the FDA would have to get in the way of them necessarily, based on all the effort that they put forward. So the FDA followed along and issued a CRL late last year. And then what we found out earlier this year is that Trevena received these Type A minutes stating that the agency would support a maximum daily dose of 27 milligrams, that they agreed to a placebo-controlled study in healthy volunteers to get QT interval data, which is what I just talked about, non-clinical data to characterize this 9662 metabolite, and so this is pretty much what Trevena needs to get in order to get this FDA approval, which doesn't seem terribly difficult. They say they have enough funding to fund operating expenditures and capital expenditures into Q3 of 2020, and because this olocirudine treatment is short term, there's a good chance that they could wrap this up pretty quickly if they just need healthy volunteers, and they also just need this non-clinical data, which shouldn't be too difficult to get, I would presume. So there's a chance that if they do get this data and they submit a nice package to the FDA, that olocirudine could be approved under this limitation of 27 milligrams per day. So here's my overall breakdown. And I didn't talk about this too. The skewed takeaways from their previous FDA meetings. So I don't think this is necessarily something to worry about, but it should be noted that the Trevena has had a history of um, not being truthful with what has gone on with their meetings in the FDA. And it's become kind of a problem because the FDA doesn't post minutes of their meetings with companies when they're private like that. It's up to the company itself to actually post a press release that outlines what the FDA said. And I don't know if it's going on anymore, but there was a class action lawsuit filed by a law firm because Trevena misled investors a little bit about an FDA meeting they had. So it's something to be cautious of with their optimism. But again, we're treating this as a relatively high risk, like high chance of failure, but high reward if it does work out. So the company also has partnerships with a company in South Korea as well as China, and they've received some upfront payments, and these are going to increase. There's other milestones, including U.S. approval of the drug. So if they get that, there's another reason why the stock would increase quite a bit if they got that. Trevena also has a bunch of early stage assets, and by a bunch I really just mean two. They have some early data on it, and it looks okay, but we're really dependent on oliceridine approval. These assets could be bought out or something, but it's not really something we want to bank on. So the company is awaiting guidance from the FDA. Trevena submitted a package to them outlining what they want to do, and they're going to get feedback from the FDA, which should, make a very clear path to them if they're able to get positive data. So really what we're betting is that this QT interval data is good in healthy volunteers, and I don't really see why it wouldn't be. It seemed like they just didn't have as many patients as the FDA would have liked in the original filing. So I think it's a decent opportunity, and I like the idea of buying out of the money calls, like one call, because I don't really want to put too much of a gamble out there. But you buy an out of the money call, and the maximum loss you can have is the money that you pay to purchase the call. So if they're going to start the study in the first half of 2019, I'm thinking of waiting until early of the second half of 2019 and buying like one out of the money call and just seeing whether or not it pays off. So that's my idea with Trevena. Definitely not a long-term thing because I think oliceridine competing with morphine is not an easy game. So this is really just going to be a short-term gamble if I happen to have the capital ready around that time. So that's my breakdown of Trevena. Next thing I want to talk about is Amarin. Amarin was in the news this week, because of their presentation at the American College of Cardiology's 68th annual scientific session. And what they showed, the additional data that they had was not just first events, but first and subsequent events. So the original data just had the first event breakdown between the Vasipa group and the placebo, but now they combine them all. And what we can see here is this hazard ratio of 0.7. So it's actually a little bit better than the 0.75 that we see with the first event. And, that's a good thing. So, and what that looks like is for every 1,000 patients treated with Vasipa for 5 years, 159 MACE events could be prevented, which, that's significant. I really think that's a big deal for people. The stock ended up selling on the news, and I don't know. I think the hype around the buyout is really what got investors excited, and when that didn't happen, it was just a good reason to sell here. So this is dated. The stock is actually hovering around 17.5 now. I added around the 19 area, and I sold a put yesterday. So it's a bullish bet that the stock's going to actually increase back over 18.5. Yeah, because I think that this is just a temporary setback. And in my model that I presented in my last video, and I encourage you all to see my previous videos on Amarin, I think the company is undervalued here. And I have been talking a lot about Amarin, but Amarin's an exciting company, so I might move on from them after this. But the things that we're waiting for now is the supplemental NDA filing before the end of March. So next week we should hear some press release. And with a 10-month regulatory review, we're expecting 2020 to be the first year that it is approved under the new expanded label, because Vascepa is already approved. It's just not under the expanded label that includes people with over 150 milligrams per deciliter triglycerides. So one reason why I think the stock did not rally was this, I don't want to say hit piece, but I almost feel like it's a bit of a hit piece by Matthew Herper in the Stat News magazine or website. And he tried to give a balanced take, but I think it was more on the caution side, which I don't really agree with because, well, check out my previous videos and you'll see why. But and I got a caveat here is that I wasn't able to actually go through the article in depth because it was behind a paywall. But the things that were brought up were the mechanism of action, the mineral oil, and the placebo, as well as the previous data that was mixed. But, for all of these things, mechanism of action isn't a huge deal if the safety is worked out. And, Vascepa has been treated in a ton of patients already. And there's been a lot of data already to show that Vascepa is safe. And, there's so many drugs that have been approved already that don't have a mechanism of action. So I don't really see this as a concern. The other thing, the mineral oil and the placebo. So I talk about this again in my other video. We can quantify the effect of the mineral oil, and the concern is that it may have prevented some statin absorption in the placebo group, but not the drug treated group. But we can quantify that because there's baseline data as well. So I think it worked out to it could be 7 or 9% of the effect is due to the mineral oil or the lack of statin absorption. But it's controversial, and I don't think this is really anything to worry about, given that they've already had meetings with the FDA about the mineral oil. So I don't think it's a big deal. And the mixed data from the previous large studies, they didn't just use EPA like Amarin did. It was either a combination of EPA and DHA, or it was just a crude fish oil mix. So it's not honest to say that those previous trials really compare to this new trial. And I think there was a Japanese study that actually showed that just EPA on its own is able to reduce the negative cardiovascular events. So watch my previous video. I disagree with a lot in this article, and I think it's what led to part of the sell-off. So with that, I thought I'd talk about a few other news events that happened. So Aspirion presented as well at the American College of Cardiology. They showed good efficacy. The thing that really came out was the increased number of discontinuations in the bempedoic acid group, and the one in particular was gout. So gout was quite a bit higher compared to placebo, and our good friends at Stat News, Matthew Herper, another hit piece on Aspirion, and this data apparently leaving more questions unanswered. So this doesn't worry me too much. I think that this drug also is a substantial offering compared to PCSK9 inhibitors. So I just see this as a hiccup more than anything, and I'm still holding on to my Aspirion, even though it closed today at 41. So might be a good opportunity to buy, but I didn't buy anything today. All right, something else that happened is Sage's Zulresso was approved for postpartum depression, which everybody should be really excited about. This is great for any new mothers who might be suffering with this condition, and it's approved under this REMS program. So the patient has to go to an approved facility and get this infusion for an hour or two. And some people on Twitter were complaining about how long the infusion is and how they don't want to do it, but compared to something like suicide, I think that them having another option is a huge improvement to what it is right now. So I think that's great. 400,000 women annually suffer from this, so it's good that this option's out there. And Sage themselves have raised almost $600 million for a sales force, so they're going to get out there and market the drug. And let's hope for the best. And their upcoming trials should also show some good data in their oral version of this drug. So I'm holding on to my Sage, and I like them as a long-term hold. All right, next company I wanted to talk about was Amarin. Amarin announced that their BLA was accepted by the FDA under a 12-month review. So people were disappointed in that. They wanted it to be shorter, and that's from the January 2019 date that they filed. So it won't be approved until early 2020, January 2020. And the company's expecting an advisory committee, and that's fair. But the stock sold off quite a bit on this news, and I don't really think that it's warranted. I have been slowly increasing my position, but I don't want to put too much capital out there. As today is a good example for, it's good to have capital on the sidelines for companies that get oversold into these big downturns. So we should be seeing some Artemis phase 3 data by the end of next week. So that might save the stock a little bit, but I still like them for long term. And then some other crazy news that happened this week was Biogen futility analysis on aducanumab. So I have spoken previously about Alzheimer's disease, and please check out my previous videos on that if you want more details. But aducanumab was an antibody that would bind to monomers and maybe not monomers, oligomers and protofibrils and fibrils, and it was based on this amyloid hypothesis that if you reduce amyloid in the brain, you can reduce the symptoms associated with Alzheimer's disease. But after so many failed trials related to the amyloid hypothesis, I think it's just safe to say that in humans, amyloid does not cause Alzheimer's disease. It is more likely that it's just associated with the condition and doesn't actually play into the pathology with it. So it's unfortunate, but Biogen does have other assets related to Alzheimer's disease, and we can hope for the best in those. There's some tau proteins that might play a role in this disease, and I think that those are good options. But it's unfortunate for Biogen, and I really hope they do succeed, because Alzheimer's disease is only increasing in prevalence. So we should all hope that a company is able to get some good data surrounding this. Another thing that came out this week was Cannabis Pharma has a caspase inhibitor for NASH, and that showed up as a failure in phase 2. So there's all these little companies that are coming up now and trying everything in NASH, and ones that I never even heard of, including this one. So it's I guess good to see that the thyroid receptor beta agonists are proving to be the kings in this world. But it is something that came out this week. And then last week we learned that the new FDA commissioner or interim commissioner is going to be Ned Sharpless, and I did a little bit of reading on him, and he's got a history of being a principal investigator at a lab. So he's actually got a research background as well as an entrepreneurial background, and his interests are in aging and cancer. So if you want to get creative and find some companies that are doing some weird aging stuff, he might be more inclined to go along with their studies. I'm thinking in specific of the companies that are infusing blood from young people and putting it into old people. That's really the only one I can think of off the top of my head. But you can imagine that cancer is obviously a huge market, and it's good to see that there's a commissioner who's very pro-entrepreneurial when it comes to developing drugs and trying to help people that way. So he's obviously a good pick for the role. And we haven't heard too much since last week, but it's obviously a good thing. All right, gonna do a quick portfolio wrap up, and then I gotta go because I am going camping this weekend, and it's going to be freezing, but I'm hoping for the best. So before today, things were actually looking pretty good, but we sold off quite a bit today in the XBI. I think the XBI is only at 25% for the year. But the noteworthy things I did, so I sold Fate at 17.40, and it's below 17 now, I believe. I'm going to try to jump back in under 15. The stock has a tendency to cycle through these like really high and really low, so I'm going to try to get back in. Amarin, I bought at 19.14 as well as in the 20s. If this dip continues, I'm going to continue to add, and I did mention that I sold that put, so I don't know how I'm going to calculate that here. If I get assigned the shares at 18.50, I'll just include that in here. because I'm going to hold them. But yeah. So with that, I am below the S&P 500 for the year, but I still have some money on the sidelines, so I'm going to wait for a good opportunity to jump in, especially if the XBI on its own goes down quite a bit. Volatility, because of today's rough close, increased a little bit at the end of the day. So we'll see if that continues or not. But yeah. Oh, one other thing I was going to mention, I think I'm going to remove Illumina from this because it's not really a biotech company. So and I have a little bit of money in Dexcom as well, which is medical devices. So I think I'm going to restrict my portfolio here to just pharmaceuticals and medicines, and not so much machinery or medical devices. So I might wait till the end of the year though, because Illumina's kind of saving my butt this year. Yeah, so with that, I'm going to wrap it up. But thank you guys so much for watching. Have a great weekend. And please like, subscribe, leave me a comment, or follow me at Matthew Lapod on Twitter.